Good morning, everybody. Thank you for taking time out of your day to join us. It is 11 o'clock on the 16th of April, and I think we're going to start calling today Throwdown Thursdays. I don't know, because Adam's a judo guy. It just seems kind of fitting, but we are going to be focusing a lot on PPP forgiveness today. So, Adam, I know that you had kind of an explainer segue on the front end that you wanted to do. So let's do that, and then we'll dive into questions. Just as a reminder to everybody, there is a Q&A button at the bottom of your screen. Go ahead and hit that, and we will get to them. And if we run a little bit long, like we did Tuesday, I think we answered about 70-some questions. So we'll see if Adam is up to his fighting weight of Tuesday. On just shameless plug, Lenny Boy does delivery of my favorite kombucha. Thank you, Lenny Boy, for doing that. Take it away, Adam.
All right. Thanks, Gary. We're going to try some technology today, so hopefully it works. But the three things that I wanted to cover off on at the beginning of the call is that, one, couple things that have really changed based on some recent guidance that came out that are contradictory to statements that I made on Tuesday that I just wanted to clear up. So the first one is, and I still haven't answered that Medicare question. I apologize. So hopefully it didn't get asked again. I will by the end of the week. So the first one was really related to the payroll tax deferral. So what you have the ability to do is to defer the employer portion of payroll taxes. So that'd be the 7.5% that we all got to kick in as employers until December 31st, 2020. 50% of it would be due, and then December 31st, I believe, 2021, the remaining balance will be due with no penalties or no interest associated with that. So it's a pretty easy method of short-term financing associated with money that you were going to have to pay in. So originally, if you accepted Paycheck Protection Program money, you were supposed to keep your employer tax or your payroll taxes current. The IRS has since released further guidance that said that even if you receive Paycheck Protection Program money, you can continue to defer payroll taxes until the loan is forgiven. So that's when you receive indication from your bank that the loan is forgiven. So, if you think about this, since the bank's supposed to get back to you within 60 days of you requesting forgiveness, that really means that you could effectively defer payroll taxes from between now until, sometime in July or August, with 50% of the balance being due. By employer tax, I mean specifically the employer portion of FICA. You could potentially be deferring that until, sometime in the July-August timeframe, conceivably. So I don't remember who asked the question, but I did tell a person that had been deferring taxes to go ahead and get current once you receive Paycheck Protection Program money. That was bad advice based on the recent guidance. Instead, if you're going to defer payroll taxes, go ahead and do it. Just recognize that you have to be current going forward the way the guidance reads currently. Once the loan is forgiven, which will be sometime in the July-August timeframe, but that whole gap in between there, you could defer until 2020 and 2021 respectively. So we're looking to do that ourselves because, the calculated value of that is effectively, $60,000 to $70,000 for us of interest-free money. So since it's available, why not potentially do it? Somebody's going to ask a question, well, would I still get a deduction for it? Probably not, but maybe. So usually you can take a deduction for accrued payroll taxes. So we'll see. So that was number one that I wanted to clear up. Number two is they released the guidance on how independent contractors should apply for the Paycheck Protection Program. So, with that, it's not really any different than the way an employer does, or a typical employer would file. What you have to do, though, is you have to provide your 2019 Schedule C, even if it hasn't been filed. You're supposed to provide a mock-up of a pro forma of what it would look like. And I believe they're also asking for 1099s or at least bank deposit information that substantiate what you brought in from a gross receipts standpoint. Assuming that you can do that, then your loan eligibility is effectively your payroll, which would be your employees, plus $100,000, up to $100,000, which represents your profit or your income. So, that's so the max is going to be, 2.5 times your income, or 100 grand, to cover you as the independent contractor or sole proprietor filing on Schedule C. So that's, roughly what you got to produce in terms of documentation. But what got really interesting that gets to the loan forgiveness piece that is also, contradictory in the guidance that I gave on Tuesday, is that they also layered in as examples that you could be forgiven for expenses, equipment expenses associated with operating the business. And they use specifically, interest on an auto loan or expenses associated with operating a car. So what that tells me is that, hey, it's quite possible that imputed interest expense associated with operating leases and capital leases could be forgiven. It also tells me that equipment rental, could potentially be forgiven. At the end of the day, that still only counts for 25% of the total amount of the loan that could be forgiven. So if you got $1 million, the sum total of that plus your traditional rents and utilities, could only be $250,000. I mean, it could go over that. It just means that it's going to be debt at the very end. But it does tell me that, hey, man, if I got the 75% payroll number and I'm still looking to close that 25% gap because my rent's just not high enough, based on what they came out with in the interim rules the other day for sole proprietors, if you extrapolated that onto everybody else, it would seem to appear that there's more stuff, as long as it's secured by real or personal property, that's available potentially to throw into the mix for that 25% forgiveness component. So, I wouldn't really, I still would be focused on, hey, primarily I need to get the payroll number, but it potentially gives us a little bit more to get into that 25% bucket if you were going to get short. So, that's relatively good news, I think, in terms of guidance. I still wouldn't totally count on it. Maybe something more is going to come out in the future, but it appears like we've got a little bit extra coming. So the other two things that I wanted to touch on, I'm going to try to share my screen here. So you guys can all laugh at my background. All right. So can you see this okay, Gary?
Yep.
Okay, so this is the Main Street funding program, which just came out a couple days ago from the Fed. It was embedded in the original law. These are loans that are going to be, you're going to get them from your bank, but they're going to come from, you're going to get them from your bank, but they're going to be backed by the Fed, and certain amounts are going to be purchased back by the Fed from the bank. So it's effectively acting as a government-backed loan, but not going through the SBA. Instead, it's backed up by the Fed. So I just wanted to lay out, real quickly some of the terms associated with this, because if you either didn't qualify for the Paycheck Protection Program, or alternatively, hey, that just wasn't going to get it done for what you needed to get done, this is another platform for you potentially. The thing is, though, these are really meant for larger companies. So, the intent really was, probably above the 500 employer count, but it doesn't have to be. When I meant the bigger companies, if you look at the two platforms that they created, the first one's called the Main Street New Loan Funding, MSNLF. You see the acronym, the NL stands for New Loan. These are brand new loans for people that you can take out. The minimum loan is $1 million. The maximum loan is $25 million. But the way that it's really calculated is more of a traditional banking equation or banking covenant, which is basically what's the company's total funded debt. In this case, it's interesting because they actually talk about, unused debt versus debt, but the calculation is effectively 4 times EBITDA. And in calculating the amount of the loan, so for example, if you had $1 million unused line of credit, and that you had $1 million available, but you hadn't used it, that's part of your unfunded debt. And then if you had $1 million in EBITDA, your loan amount could be $4 million, but since you have the $1 million that's already available that presumably they want you to use first, your loan is going to be $3 million. Again, a lot more details on how this is going to work, but this is another good potential platform. The interest rate is SOFR, which is basically the daily bank rate that they charge themselves, plus between 2.5% to 4%. So right now, SOFR is sitting at about 1 to 1.2%. So it's effectively between a 3.5% to 5% loan. The terms are 4 years, but the first year is deferred. And the specifics behind it is pretty similar to the Paycheck Protection Program. You are supposed to provide some assertions that you're going to use it primarily to try to keep people employed. You can use the money to pay existing debt obligations, but you can't use it to refinance existing debt obligations. And the lender has to promise that, hey, whatever debt you had intact at the beginning is intact when this loan's in place. In other words, you can't have that same $1 million line of credit and say, oh, poof, now that you got this government money, we're curtailing your line of credit. The other thing is, hey, it's not, it's also not forgiven. But, conceivably you could use this in combination with the Paycheck Protection Program. The other one that's out there is called the Expanded Loan Facility. So this is just saying, hey, whatever availability you had, we'll juice some more in to that existing availability. So same $1 million example, actually that's a bad example because only 30% of unused debt. So let's say that the credit facility that you had was $5 million, all of it unutilized. In this case, you could get an additional $1.5 million, conceivably backed by the Fed on that existing unused debt. Basically the same terms as MSNLF. That's my understanding of how the program works today. And again, the MSELF goes up to $150 million. So again, it's really meant for larger companies. So that's the new program. I expect that we're going to start hearing more about it from banks here relatively soon. So the second thing I want to hit on, because we've had a lot of questions about this as well, this is where I hope my tech really works, is really your timeline. So let's say that this is 4/15, the day that I got funded. So you've got your 8 weeks, but your 8 weeks is really 56 days because you're assuming that it's 7 days times 8, it's 56 days. But I'm going to go ahead and round that number out to be 6/15, even though it's technically probably not correct. We're just going to keep it simple. So within this 56 days, I need to get to my 75% payroll, and then try my best here, Gary.
You're doing all right.
25% other eligible, which is the rent, utilities, that kind of stuff. Well, a lot of people have had questions around, but I don't really know when I'm going to open. So I think what you need to be doing from a cash flow scenario is probably looking at about right here. And at this point, it's kind of a low trickle of spending some of this money. And at this point, it's a lot higher of spending this money, including if you have to pre-fund some payroll. About the only thing that it says that you can't do is you can't prepay your debt payments, which is where the interest expense deduction comes into place, but it's really silent on potentially prepaying anything else, which would also imply getting caught up on things. So if you abated your rent for the month of April, this would be a good time to potentially get caught up. So you really need to be looking at, how do I spend the money here to maximize the forgiveness amount? So then, sometime around this point is when you go to your bank for forgiveness. And then within 60 days, they're supposed to say yes or no. There really wouldn't be a reason for them to say no unless for some reason you didn't meet this criteria, or you met this criteria, but you can't prove it. So, I wouldn't see a reason why this wouldn't be forgiven. So that's really your timeline of what you need to be operating on. And as I said on the Tuesday call, if you don't believe that you can even open by this date, you could go ahead and take the funds, but I don't see any real reason for, not trying to get it spent, because otherwise you're just left with some short-term debt at the end. And I feel like if the economy is like, we're not back to doing something by 6/15, there's going to be some other stimulus that I think probably happens. So I'm really wondering about the use of time to try to forecast what happens if we can't even get open by, sometime in June, just based on everything that we're hearing now. I hear the whole thing about social distancing 2 years if nothing changes, but I don't think anybody's saying we're not going to open the economy for 2 years. So the next thing that we've had questions on, going back to timeline, is when does the clock start? So let's say that this is the day that you sign docs for your PPP loan. This is supposed to fund within 10 days. And then this is when you have your 56-day clock. So if this was 5 days, it just means that the clock looks more like this. A lot of people have said, can I delay funding? You really can't. So the only thing you could do would be to potentially delay document signing, but I mean, the funds are exhausted, from everything we're seeing. They'll probably get recharged, but I don't see the value in trying to delay document signing at this point. So, all right, I think we're back now.
Rock and roll. Hey, can I start with some good news? This is from Joe. He said we got funded the same day within an hour from the signing of the docs. That's amazing.
Yeah, that's great. I've heard a couple cases like that. I've also heard cases that, within days. So that's all good.
Yeah. All right. So first question goes to the early bird. Jane, at 5:54 a.m., you hit me up on this, so I'm going to put it to the top. And that is, when I receive the PPP funds, do I have to bring back 100% of my employees immediately to have forgiveness for my payroll once I receive the funds? If only half of my employees come back at that time, will I have half of their payroll forgiven? You talked a little bit about this on Tuesday, but you might want to reiterate it.
Yeah. So the things that you have to keep your eye on. So let's say that you reported, 10 employees. I'll keep the math simple because I think this is actually an example that I got over text this morning. You got 10 employees that you reported as your average FTE count. And when you do your average FTE count calculation, for the purpose of calculating forgiveness, you see that you're basically trending towards 5. And you're like, crap. If I don't change anything, that means that under the existing guidance today, now this all may change, but under the existing guidance today, then only 50% of the loan would be forgiven associated with that payroll component. But if I'm back at 10, 1 minute before midnight, June 30th, all is forgiven. So you're basically comparing the average FTE count between two periods. And if you fail the test, as long as your head count is right by June 30th, doesn't matter if the average was wrong, if the head count is right by June 30th, you should have all forgiven, assuming that you spent the money correctly. And then it's so far silent on what happens after June 30th. I keep on using June 30th. It's actually at the conclusion of your 56-day period. So, people have kind of wondered, well, what do I do about that? Well, one of the calls I had this morning, I was asked, well, what if I put my wife on payroll? I don't see why that would not count. So that would be an appropriate strategy, for you to figure out how to get your head count back to where it needs to get to.
Awesome. All right. So this is a coaching client and an accounting client of ours, Richard, and I would expect no less than this detail, but this is a good one because this is the kind of granularity I think that people are clamoring for, which is why we're doing this. So here's the detailed question. How detailed does our tracking need to be? So they got funded yesterday. 8 weeks will be through 6/9 based on his numbers. So for example, we pay payroll every Friday for work performed during the week prior to ending the prior Saturday. So will this Friday's payday not count at all because it covers a period prior to our funding period? Or does it count 100% because it's paid out during our funding period?
Yeah, good. So good question. And there have been a lot of questions like this. So I'm going to break that down into two components. One is on the tracking itself. The second is what's going to be allowable. So on the tracking itself, we've had a lot of people asking questions about setting up separate bank accounts. How do I track the expenses? I feel like for most people, worrying about separate bank accounts is overkill because the whole point was to spend the money anyway, as you would normally do in the normal course of things. So all you really need to be keeping your eye on is if I spend enough to maximize forgiveness. And I don't think that requires a separate bank account really to do anything with, because if you end up not meeting deployment of the full funds, you either pay it back or it turns into debt. Or if you deployed the full funds, but you didn't mix the ratio right, it just ends up as short-term debt. So I think using separate bank accounts, probably a little bit of overkill. However, if I was the mindset that, look, I'm going to run the business like I want to run the business, and I'm not going to have any debt at the end of this because either it will all be forgiven or I'm going to pay all the money back, that would be the one instance where specifically around, I'm not sure if I'm going to use all the money, but I don't want it as debt. That might be about the only case that I can think of where you might want to have some separate tracking to make sure it didn't get used. And then you're stuck with some debt at the end that you need to pay back versus just expense cutting. So that's really the only scenario where I'd see a lot of separate tracking. As to what's included in the payroll, I'm going to expect other guidance to come out in the future about how to calculate the pay. But what I would end up doing, and this is what I think we'll end up doing is BGW, if we need to, absent other guidance, just to keep it really simple for the bank to do, even though it's more work on our part, is that, I believe that I probably would count, this period because it was paid out. Like everything appears to be cash basis, even though it may not be technically correct. I would include this period as it was paid out. And then if I needed to do a special payroll run to fit getting people paid current within that window, then I probably would do a special run if I had to, because otherwise, you're basically asking the bank to certify something based on an accrual basis accounting. And I just, I feel like everything's leaning towards this is going to be show me where the money came out of your bank account type of thing. So I would focus on cash basis accounting at this point. pending further guidance.
Yeah, and he went on to a lot more granularity on, you know, hourly employees, especially because this pay period hit in the middle of the week. And so he was getting into a lot of that. And then similar question for water bill, power bill, internet bill, et cetera. Are they prorated based on the number of days, or do we need each employee to track exactly how much water and electricity they use every day?
Yeah. Classic Richard. Yeah. I mean, it's possible they could specify that level of granularity. I just think that would make the bank's job a lot more difficult. So I feel like they're going to try to keep it simple and say, just like they did with, look at line 5 on your 941s. I don't need to see a lot of fancy mumbo jumbo. I feel like it's going to be, show me where the cash went out of the account right now. But I would be prepared that as we get closer to the date of forgiveness, barring other guidance, you know, we might need to modify how payroll is paid to make sure that whatever you're trying to get forgiveness on actually is paid within that time frame.
All right, hopefully that has answered Richard's question, and if not, you can ping us. You know where we live. So this is from Lori. She said, we helped several clients apply through Lendio, referred by Wells Fargo business banker, for the PPP loan when Wells Fargo couldn't process loans. Now Wells Fargo is telling customers that they can apply. They're asking if they should apply again. I'm not sure if this will help or hurt them.
It couldn't hurt to go ahead and apply again.
All right, this is from Marguerite. We're an S Corp. If we do get PPP funding, can we pay our outstanding CPA invoices for 2019 tax return prep, both for personal and business returns, with the 25% outside of payroll?
Well, as much as I love us, I don't think we're going to be included as an allowable expense for forgiveness. So you could pay it, but those aren't what would typically be included as items that are allowable in the 25%. It really is rent, interest, and utilities. I guess I could argue that we are a utility, but it really is just rent, interest, and utilities.
Because we have a few people on unemployment who want to stay on unemployment, should we give raises to those still on payroll to meet the qualification on 25% funding for payroll?
Yeah, so then I would, because you're trying to hit the 75% funding. So then all you're going to have to figure out is, well, then how do you get the FTE count right? Even if you have to bring the people back on unemployment for a day just to get your FTE count right.
This is a good question from Marguerite as well. Our office is in our home, so our mortgage and utilities are not business expenses. I assume we cannot pay these bills from the 25%.
So, this is where things start to get a little bit interesting, and hopefully there are no attorneys on the call. What I would suggest you do in that case, to keep it simple, is execute a rental agreement with yourself to rent your space dated 1/1/2020, and maybe go figure out a way to make some back payments to yourself, and then just rent your own space. So what would end up happening on your tax return is that on Schedule E, you would report rental income for this amount, and then you would also get a deduction for some of the mortgage interest and expense pro rata based on the space that you're actually occupying. So effectively, it ends up at zero income, plus that rent would get forgiven. That's the way that I would do this in the case of a home office, to keep it super simple for the bank.
Next question is, can we pay our workers' comp liability insurance with the 25%? What about, what other expenses can we pay? Can we purchase equipment and supplies?
Remember, you can pay for anything with the 25%. Well, you can pay for anything with the loan. It's just that the only stuff that's going to get forgiven are payroll costs, of which workers' comp is not in it currently. And that has to be 75% of it. And on the 25%, again, it's rent, utilities, interest on property that on real or personal property that is secured, associated with the underlying debt instrument.
All right, a few questions here from Vicky. We know that during the forgiveness period, salaries cannot be reduced more than 25%. What, again, is the comparison period for that?
The way the guidance reads currently is the comparison period is, I believe, pre-February 15th, if I'm not mistaken. So basically before the S hit the F. And remember, that's only applicable, like the anybody over $100,000, that's free. So, if you have somebody that made $200,000, as long as they're at 75 grand by the end of the 8-week period, you're good. Doesn't mean it has to be even an average. Literally you just have to say, Gary, I know you made a couple hundred, and I know you've been making 50. Now you're at 75. All would be forgiven, assuming that I had actually spent the 75% on payroll costs.
All right. So,
sorry about the dogs there.
No worries. Delivery guys there.
Yeah.
So we take the individual salaries for each employee paid during the 8-week forgiveness period and compare them to the salary level of what period?
Again, I believe it's February 15th.
All right. If an annual bonus was paid during the comparison period, can an adjustment be made for that?
Well, yeah, because it was part of it, it was part of the calculated amount. But just remember, if that got to be over $100,000, on an annualized basis, then it wouldn't. It's already removed from the calculation.
Yeah, and she gave this stipulation. Even some of our employees who make less than 100,000 can receive annual bonuses that are significant to their overall salary level.
Yeah, I still think. It's all still part of It's also part of compensation. It was presumably used in your average.
All right, this is from Tom. I received PPP funds yesterday on the 15th. That means end date is Wednesday, 6/10. Can you explain how payroll costs are covered during this period? Is the days actually worked during the period, or the day the check is written? This is kind of going back to Richard's question as well. Do I need to adjust payroll period to weekly versus biweekly? Can I prepay payroll for the period post 6/10 before 6/10?
Yeah, it's all kind of the same answer that, somehow you got to get to 75%. And right now we're going to assume that you're going to have to prove that funds left the bank. So what I would do, because it's only April 15th, we've got a little bit of time. And I believe that if you're going to jack with employees' paychecks, you're supposed to give them either 15 days or 30 days notice. In this case, it'd be a positive jack with the paycheck, not a negative. So if you think about it from that perspective, I wouldn't change anything about what you're doing until probably the middle of May, because hopefully there will have been some more guidance out at that point. But if there is no guidance out by the middle of May, then I would plan on, I'm going to have to get some people current and maybe even be doing some prepayments to get to my 75%.
All right, this is an interesting statement and question from Vicky. Tony Nitty is saying it's possible that expenses paid with forgiven loan funds, for example, salaries, etc., may not be tax deductible due to Section 265. Expense allocable sorry, to tax exempt income are not deductible. Have you heard anything about this?
No, and everything that we've been reading is that the intent was that you would still get the deduction for the expenses.
Yeah. All right, cool. All right, Marguerite.
Even if you didn't, it's still pretty cheap money.
Yeah, 1%, right?
Well, it'd be at my tax rate. So yeah.
Oh yeah. For Marguerite, capital gains, we're thinking about selling one of our rental properties and doing an exchange. Any word of capital gains changes during this time? So little on the market, it'll be difficult to find an exchange within 45 days.
Haven't heard of any changes in capital gains, but remember that for the 45 days, that's just to identify property, and that's pretty liberal. That could be like, hey, I think that's 5 houses in Davidson, or a commercial property in Mooresville. Like some intermediaries are very specific about I want to see addresses, but most of them are pretty loose on what does that mean in terms of identification. So I would not worry about that as much versus having a general idea of what you were going to do.
So I think we've covered this, but this was a question from Lane, and it was, can you cover what you know about forgiveness period and when it would start for clients receiving funds? A bunch of clients have been asking about when this starts, and it'd be good for them to hear, but I think you've addressed that.
Yeah, that was in the window time talked about.
Okay, let's see here. Kudos to Aquesta Bank. And Pinnacle Bank and Town Bank, we've heard a number of things. Town Bank funding was within an hour or two. These are some things from the chat. I have a client that's been keeping the PR going with no income coming in. They will be closing on PPP soon. Can they get credit for the payroll paid the last 4 weeks? Can this be included in the 8-week period?
No, that was all on them. The 8 weeks. I mean, everything that we're reading is the 8 weeks literally is from the date that it hits your bank account 8 weeks forward, versus what you covered in the past.
All right, this is from Twinette. Our company is based on productivity as well. Our therapy company is technically closed, but we will try a few clients with telehealth. We're able to convert hourly employees to salaried employees during the 8 period, or are we able to convert hourly employees to salaried employees during the 8-week period that we receive PPP funding to satisfy the 75% payroll requirement, and then convert them back to hourly after we're open?
Yeah, I don't see it. I mean, it's more of an employment law question, but I don't think there's any downside to do that. Or if you just said, I'm going to pay him for 32 hours. I mean, however you get to the answer in the most expeditious manner is the way that I would do it.
This is from Sarah. If we prepay employees for work to be completed once we open, and then we're still not operating after the 56-day loan period, does this preclude our staff from re-enrolling for unemployment benefits?
So that it doesn't preclude them from re-enrolling from unemployment benefits, because they would have been paid through the date of the forgiveness period. So let's assume that, hey, you pay them through June 15th, but that really was meant to cover July timeframe. The only person that really knows that is you and the employee. So when they're filling out unemployment, they're going to report they were let go. So there shouldn't be anything that restricts them from then collecting unemployment during that time period. I appreciate that is double dipping, but there's nothing that prevents you from doing it. And if you're not able to open, my own personal feeling is that to hell with double dipping.
This is from Stephanie. Can we prepay, or can payroll be prepaid to maximize? And if you pay biweekly, should I change to weekly?
Yeah, I think we've hit that. I probably wouldn't change anything until you hit that mid-May time frame, once there's more guidance, because hopefully there's more guidance that'll tell us a lot more around, is this accrual basis or cash basis, and are there any restrictions around it? But I would plan on, if it stays like it's reading, which is cash basis, you're going to have to get the math right, which may mean altering pay periods and doing some acceleration of payments that you would have made otherwise.
All right, this is from Jan. Does Adam know how to keep ADP or other payroll processors, quite frankly, from paying employer matching FICA taxes after processing payroll?
Yeah, there's I can't speak specifically to ADP, but our payroll company had a request process to do that. So I would assume ADP would have that same request process. But if you could take a note, Gary, we could email Lakin, who is the rep that we've worked with at ADP, to find out what their process is and get it out there. But I believe you literally just make the request, and I think there's a form they have you fill out, basically acknowledging that, hey, you're still obligated for the money, and blah 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 blah, and then they just stop taking it from you.
Yeah. Hey, Jan, go ahead and just in the chat, if you want to put your email address, and we'll send that response back to you then once we hear back from Lakin. This is from Shane. Is it okay for us to pay employees with PPP loan even if employees are not working? I think we've heard yes.
Yeah.
Have a specific case where an employee is taking precautions to take care of his elderly grandmother and currently using FFCRA provided paid leave, but when that runs out, can we use the funds to pay him time off? So
you just can't you can't double dip and take the credit.
Okay. Let's see. Next question. Is the FTE calculation based on equal or greater than 30-hour employee or 40-hour employee?
There really has not been any guidance on that. So I think if you felt the need to be, the technically correct answer should be however you reported it originally is how you should report it now. However, I feel like if you needed to be aggressive, then you could roll back to the ACA requirement, which I believe was either 30 or 32 hours. I mean, and your position would be, well, that was a freaking law for health insurance. The only challenge you'd run into is then, someone might say, well, then go reperform the calculation that you did originally. So I would plan on having to reperform the calculation that I did originally. But if I had to, I might give it a shot at following the ACA requirement.
This is from Cindy. We had 19.5 FTE pre-CARES Act. We have decided this is a good time to trim the fat and plan only to bring back 13 to 14 employees during our 8 weeks. Can we formally release the 5 to 6 employees 7/1 and pay the vacation time we still owe them on 6/30 so that these employees are still in our count?
Yeah, I have no reason you can't.
Okay, next question. What if you pay a daily rate, not hourly?
I don't think there's any difference there. I mean, it's still just trying to get to 75%, even if you had to pay ahead a couple days.
Okay, let's go to this. This is from William. Haven't seen our loan docs yet, although we've been assigned an SBA loan number. But a client had a great question. They have several traditional credit facilities, and their question was, to what extent will PPP loan product either be either senior or subordinate to existing facilities?
Well, I mean, it's technically unsecured, and it's government backed for the 2-year period. So, when we signed, I mean, there was nothing in our loan documents about a UCC filing. So that would imply that it's secondary, and the bank really shouldn't care because it's government backed for the 2-year period. So it's basically an unsecured credit facility. So I would not think that it's senior in terms of repayment based on what I've seen. Something may come out that's different, but I would think that it's not senior.
All right, this is from Elizabeth. Thanks so much for doing these. What if we have to fire someone during this time? It's my understanding with the PPP loans that as long as we use 75% of our funds towards payroll, again, whatever that looks like on our end, we're eligible for forgiveness, correct?
You'd still have to get the FTE count right at the very end to replace the person, even if it was 1 minute before your 8 weeks is up. Or you just accept the fact that you're going to have some pro rata forgiveness.
What happens if I do not use 100% of the PPP loan amount? Do I simply return the remaining amount to the lender?
You either return the remaining amount to the lender or it becomes short-term debt. So remember, first 6 months, no payments, interest accrues, then payments kick in on whatever would be remaining if you don't pay it back immediately.
All right, next question from Cynthia. We paid a bonus in the first quarter of 2020 for 2019. First quarter wages reflect an increase due to this. When we calculate the forgiveness, this will hurt me since I'll be showing a decrease in wages based off first quarters as they are inflated due to the bonus.
That would get more into the mechanics around, was somebody restored to the 75% number or not? So I probably would look at that on a case-by-case basis. So as long as you spent in totality 75% of the funds on payroll-related costs, you don't really have to worry about period matching too much. But for a bonus that you paid somebody during the test period, and even then, only to the extent that they make below 100 grand, and this was a significant component of their compensation. So, there probably is a little bit of exposure there. If it was somebody that made, 50 grand, but with the bonus on an annualized basis, they made 75 grand. So it's something to consider, but that's really going to be the only case where that's going to be a factor.
Next question from Richard. If you do payroll tax deferral during PPP, can you still get forgiveness of your payroll taxes during that overlap time? Wouldn't that?
Remember, the employer portion of the taxes was never part of the loan amount in the first place. Therefore, it's not forgiven. That's why it can be deferred.
This is a good throwdown back to your judo. This is from David at Clean Juice. And he said that they're going to deliver free organic juice to me because he doesn't want me drinking that kombucha anymore. Love it. Bring it.
Fair enough, David.
Question is payroll calculation for forgiveness. What line items from my payroll reports must be excluded from payroll amounts I'm claiming?
The only thing that's excluded is the employer portion of tax, federal unemployment, but for most people, you've probably already maxed the federal unemployment amount at this point anyway. And then, to the extent that you do some reimbursements like auto expenses or cell phones or whatever, those wouldn't be included typically. So, those are the only items that would be excluded. Everything else should be in there.
All right, James, approximately what percentage of your clients have been seeing PPP funding at this point? We filed early and have heard nothing, starting to get nervous.
More and more every day. So it's more bank, instead of employee or instead of client specific, it's probably more bank specific, I would say. So if someone's on this and has had a positive answer so far, we're kind of still same as Tuesday. I mean, we're down to, Wells, we haven't heard of anybody that's got funded. BB&T / SunTrust / Truist, we haven't heard of anybody that's been funded yet. And then, Fifth Third and PNC have started to fund. But outside of that, I mean, even, we had a couple panicked exchanges with people with Bank of America the other day that, came through. Loan docs came through, which means they're going to get funded. So again, it just feels like, community banks were the first out of the gate. Bigger banks were a little bit slower, and the only ones that we're down to at this point is BB&T, SunTrust / Truist, and First Citizens are the only two that we really haven't heard of that anybody's been funded yet. And we're talking about this internally, pretty much every day to stay on top of it. So advice is still the same, that if your banker's communicating with you, then and letting you know where you stand, that's positive, and I wouldn't be panicked at this point, because they all were trying to make reservations, get people numbers to get funded. So if you're in kind of in the earlier application window, I'm very optimistic that you will be fine. It's just a matter of timing. So I wouldn't change anything. And then hopefully in the next couple days, if it hasn't already happened in the time span that I have not had CNN on the background, they'll recharge the funding again, since it's tapped out now at this point.
All right, this one's from Thomas. Any guidance on how the Fed will use contingent or temporary staff? Will these numbers of staff be used as in the ACA formula? Temporary staff is counted in temporary staffing company, i.e. FTE is anyone over 28 hours a week, and fines, penalties are responsibility of the staffing firm.
Yeah, it doesn't, for this purpose, absent further guidance, you would assume that however you arrived at the calculation is how you're going to have to arrive at the calculation, because it's going to be up to the bank to inspect it. And I just don't see them diving into the weeds of, how many hours did this person work, because this whole thing is kind of predicated on certification of the borrower, which is us, with a limited due diligence inspection on behalf of the bank. So I feel like I would only be worried about the ACA calculation pending further guidance that says I have to use a calculation like that, or I might consider using it if my FTE count is low, even though that may be inconsistent with how I arrived at the number in the first place.
So regarding a staffing firm,
because like in the case of the ACA, if you work 40, it's not like that's 1.2 FTEs. It's still 1 FTE. So if I was consistent with 40 hours in the beginning, and it wouldn't really change the whole lot on the 28 hours, then I might look at doing the 28 hours if I was looking a little bit light.
this is a staffing firm. Can they use all the FTE or headcount, or just their full-time staff that's running the firm?
So we've had a couple staffing companies that have asked that same question. So assuming that you are below the 500 employee count still, so you met that criteria, we've had some staffing companies that have used temporary labor, and I believe the staffing, whatever the industry board is, lobbied on that behalf to say, look, they are employees of ours. We are having slowdowns in our own receivables for some of these people, and we're trying to keep them employed and actively working. So we've had some clients that have counted the temporary labor in their counts. And we've had some that haven't at their own election. Kind of the case for is it's a big pot of money, where you've got some labor potentially forgiven. The case against is, yeah, man, but if you took that big pot of money and then the people didn't actually work, what are you doing with it? Because they would have been better off on unemployment at that point, and now you're left with a whole bunch of debt at the very end. So, I think that's going to be more of a case-by-case basis on how much your labor force is actually working. We have one group that, that the people can't work just based on the nature of the industry. So while they could conceivably take funding for all of their temporary labor can't work, and they're better off on unemployment. So in that case, they really were probably better off going with just the temporary or the main support staff.
This is from Michael. In the news, it's been said that PPP funding has been exhausted, and until government adds more funds, until they do, is this?
Sorry about the dogs there. Yeah, so I'm hoping that now that that's gotten out there, something will get fixed in the next couple of days. So thank you for providing us with yet another nail biter, Congress. You are still getting paid last time I checked.
Right. Can you delay funding up to the 10 days since it's been, since it has to be funded within 10 days, or is that bank discretion?
It's going to be bank, as far as I know, it's going to be bank discretion. And again, I don't know how much I mess with that at this point, because the bank really just is trying to get the funds out there.
We applied for the loan, and I was advised by our banker that it's still in process and to a live person now. Hearing the news that the funds are running out, so we just kind of addressed that. Yeah, I'd stay in touch with your banker. Heard 350 billion all spent. Same thing. We've applied at PNC, but not approved or funded. Are we frozen out? Bank isn't saying anything.
I think that's going to be, again, your application. I can't speak to why you haven't heard anything, but I think it's going to be your application status specific, because I believe that what happened is that, hey, you submitted the application, you know, whether you had the supporting documents in or not, they reserved a spot for you with the SBA, which then said funds are now reserved. Excuse me. Which, even if they're exhausted, it means that your funds were in there in reserve. So it probably depends on when you got the application in and when they then turned that around and did the initial reservation with the SBA. So your banker's probably just not trying not to set a false expectation, but it really depends on whether or not they got any initial reservation in with the SBA or not. And again, I'm really optimistic that Congress will get off their butts today or tomorrow or by the weekend and have something through to cover the additional recharge.
Yeah, this is a related question from Matt, and it also has to do with PNC. I was approved last night at 8 p.m. Money ran out this morning. Is the bank holding money for me even though the program has run dry?
I don't think that I think those two are unrelated, because I think if someone says you're approved, it means that there actually were funds reserved.
Yeah, I would take it that way too. I've got a client, this is from Ken, who's been, let's see. Oh, we've already addressed that. That came in through chat as well. Carol, for employees with a salary greater than 100,000, can we seek reimbursement for the salary component that's less than 100,000 and simply exclude the salary over 100K?
That's exactly how it works.
All right. Thomas, what is considered utilities? Monthly IT server management, window cleaning, monthly music charge?
There's not really a bright line on that. So, you know, I think it's what's required to keep the business operational. So telecommunications, electricity, gas, water, sewer. I think where it starts to get a little bit dicey maybe is my tax software a utility? You know, probably not. Is my antivirus software a utility? Firewall license? Maybe. So I'd expect some further guidance around that. Again, though, that only is relevant to the 25% component. So like if you look at BGW's example, we're going to end up spending more than the entirety of our loan between payroll and rent and utilities. So the payroll component itself, by our math, is going to end up eating about 85% of the total Paycheck Protection Money dollars. So the only time you're really trying to cram in additional expenses is if you're just squeaking over the goal line on the 75%. So check number one, and now I want to maximize 25%. Let's throw everything in but the kitchen sink. So it really, think about it as, hey, it's what's required to keep the lights on around here. So I wouldn't get super aggressive unless I had to on that one.
All right, quick time check for everybody. It's 1 till noon, and we've still got about 14 open questions right now. So we'll just keep rocking. And if somebody has to peel off, we will post this on our BGW CPA YouTube channel yet later on this afternoon. This is from Chris. If a client thinks it does not need the PPP money now, but applied anyway, since May and June are uncertain, are there steps that should be taken to support the application certification? The funds are needed for ongoing operations, projections, corporate consents, et cetera. They're worried about later audit and perhaps issues under False Claims Act.
Well, we're all in the same boat on that one. So I'm just going to give you the BGW example that I keep on giving is that, I believe in my heart that at the end of the day, our year is probably going to land how our year was going to land. But what I don't know is when that will happen, other than it will likely be stuff that I thought I was going to do in the second quarter, I'm actually going to do in the third and fourth quarter. And we're starting to see that. So I believe that everybody that thought they were going to be fine, well, that's not going to end up being completely true. Because even if you're I had a phone call this morning that even if I'm somebody that is an essential business, and in this case, it should be a freaking slam dunk, telemedicine. So demand is totally up. But if the customer that's paying has had a slowdown, they've had a slowdown in their receivables, which is pretty much what's happened at BGW. We've just had a slowdown in our receivables because everybody's struggling and trying to preserve their own cash. And as much as I'd love the CPA to come first, I understand that sometimes we come last. So I'm really not as concerned about the certification at this point because I can already demonstrate that relative to what we should have expected, we're down about 25% so far in the month of April. All other data has said that, hey, even in May, at best, it may be 75% of what a normal May might look like. So right now we've talked about this earlier. Right now, there's nothing around the audit process or subsequent inspection. So if you think about what's going to happen, you're at the end of the loan window. So 8 weeks is up. It's the middle of June. You apply forgiveness. Bank has 60 days to approve it. So what's the bank going to do? The bank's going to say, all right, show me what you spent the money on to make sure it's qualified. Right now, there's nothing that says, other than I just need to certify that, yeah, I was harmed and I needed it to keep people intact. There's nothing around the bank having to inspect that I actually experienced a damage. But even if they did, I just feel like the likelihood that you're going to be able to show harm is actually pretty good just based on our own experience. And we're supposed to be a recession-proof, nothing could go wrong in a CPA firm unless I totally run it right into the ground type of business. But at the same time, we're suffering, we're still collecting cash, but it's a lot slower than it should be.
So this is from Anonymous. Are you technically able to jack up the employees' paychecks if they're unable to work because of homeschooling in order to satisfy the 75%?
Nothing says that you can't do that.
This is from John. We own 2 of our location buildings and have leases within our LLC. Can we count this rent as forgivable?
Yeah, there's nothing that precludes excluding self-rentals.
This is from Carolyn. If we spend 100% of PPP on payroll for 100% loan forgiveness, or can we do that?
Yeah, they're like 75-25 was just a guideline to say, hey, we get that since it was 2.5 times payroll to cover, in theory, a 2-month time period. We're trying to give you a little bit extra, but again, going back to our example, we're going to spend almost the entirety on payroll.
Okay, this is from Anonymous. You mentioned double dipping. Can owners of S Corps who are on payroll file for unemployment?
You're going to be subject to the same standard for unemployment. So in that case, if I was, you could do it, but technically when you're filing, you're supposed to be certifying on the unemployment side that somehow you've been reduced. So in that scenario, you'd have to do some math on the $100,000 thing. Sorry about the light going off there in the background. It's about to die. Yeah,
it's a disco.
Poltergeist. You have to, like in that case, if I'm making like 150 if I drop myself down to 100, I guess technically I would be reduced. I could file for unemployment. I get the $600. I wouldn't get North Carolina, but I would get the $600 from the Fed. I would assume, since I have been reduced, I've still hit the 100 grand on the S corp wage on the wage side, and I've still hit. I'm still maximizing unemployment. Outside of that scenario, I think it would just be hard for you to get the loan forgiveness fully done and then still be able to say that you were harmed somehow to be able to file up for unemployment without having the wage actually reduced in some way.
This goes back to the vehicle expense loan, forgivable expenses on the front end. Is that just for independent contractors?
Yes, I mean, I think at this point, the way the law reads is the law actually reads interest on mortgage obligations for real and personal property. So real property, that's real estate. Personal property, that's all property that's not real estate. What is confusing is the use of the term mortgage because that implies only real property, because nobody uses the term mortgage when it comes to personal property. So they use secured, not mortgage. So that's the only time that any guidance has said anything about personal property, and everything since then has just said mortgage interest, period, on property, period. So then when the independent contractor stuff came out, it started talking about auto loans. So if you revert back to that's why I said at the beginning of the webinar, hey, look, I might have called it wrong on Tuesday based on this guidance that came out. You probably could extrapolate that back into saying that, any interest that's secured, any interest that is associated with any debt obligation that's secured by any form of property, probably that you would pay property taxes on, whether it's real property or personal property, probably is going to be allowed. But again, you're only talking about up to the 25% piece. So the only reason you're going to need to include that is if you're going digging for dollars. Now, guidance may come out subsequent to that, saying, nope, doesn't count. But right now, since it's in the independent contractor, they're trying to stay consistent. I would assume that it's going to be the case for everybody else too, but you're only going to need it if you're struggling on that 25% piece.
All right, this is from David. On the loan applications, we did not interpret number of employees at FTE, but we were guided to count number of social security numbers we employed during the 2019 per month in that box. We've mostly part-time people, so we count FTEs for the forgiveness base period using total payroll hours for a 2-week period divided by 80 hours. Much lower FTE count than the social security number head count used on the application. Concerned about being held to the application number of employees rather than the base period of FTEs during those 2 periods. The PPP stated January, February 2020 or February through June 2019. What do we do about the inflated employee count on the original application?
So I think in that case, pending further guidance, I would just be consistent. So if you counted belly buttons in the beginning, I would count belly buttons in the end. And that at least you got an apples to apples windows and you should be fine. In a scenario where you counted belly buttons in the beginning, guidance comes back and says, oh, nay, count it this way in the end, and it's inconsistent, then I really got to believe there's going to be some relief mechanism to say, well, if you're going to say that's the way I should have counted it, you should have freaking told me that in the first place. So the real comparison is this, not this. Because remember, the comparison data points, as it reads right now, is, to the same period of time, February, April 27th through June 30th, 2019 versus April 27th and June 30th of 2020 in your 8-week window, or January 2020 through February 2020. And I just feel like you're going to have the opportunity to reperform your FTE calculation based on those are the comparative windows versus what you put on the app.
This is from Mary Ann. Please define utilities. So I think we already covered that. Let's see. If employees have health benefits, are we able to use PPP funds to pay for the health insurance premium for the 8-week period?
You betcha.
Next question from Carrie. Sorry if I missed the answer, but can I get in on free clean juice deliveries? Yes. Just call them. For those that
Hey, David, I would like to remind you that I live about 2 miles from the store in Davidson, so I'll be heading out there in about an hour.
I got you beat. I'm less than a mile from the one at Quail Corners, and I do frequent it frequently. So the next question from Carrie is, for those who have submitted and uploaded documentation but not received any notification or funding based on what you know about overall status of PPP, what's your expectation for those applications still outstanding? Are we expecting those applications still to go through?
I'm optimistic that if it was done more than maybe 4 to 5 days ago, there's a good chance they're just going through the backlog but have already reserved funds off for you. If it was within the last couple days, maybe not. But I'm also optimistic that something's going to get passed to recharge the kitty.
This is from Elizabeth. We've taken time to restructure the company. Will the SBA look in detail if the exact employees were hired back, or is it only about headcount?
It's headcount.
From Anonymous, when we receive our PPP funds, will we will credit a liability account? Should we then be debiting it each pay period thereafter, or is there a better way to handle it?
Yeah. So, if you think about debits and credits, I receive, $500,000 in cash. And if you wanted to, so that's my debit. And then my credit is PPP liability. So when I go to spend the money, I effectively am spending it on P&L line items because they're actual expenses. So in that case, I'm crediting cash and I'm debiting the income statement. And then what I would end up doing is probably a journal entry that would be a contra P&L entry, remembering that barring other guidance, that's still tax-free, that would then reduce the liability. So like if I spent, $500,000 all in payroll, I would record a $500,000 payroll expense, and then I would have a contra account on the P&L saying, PPP forgiveness or whatever that is. So I still show the true labor expense. Then I've got a contra account that then goes against the liability, pending, something else from the Journal of Accountancy or FASB or whatever. That's what I would consider doing.
This is from Twinette. Would supplemental dental and vision benefits apply?
Yeah, I don't see why not. I think the only, can't remember what question that I got asked. There was kind of it was disability insurance. I don't think they're really counting disability or life, but I don't see why other group benefits wouldn't qualify that are more health oriented.
This is from Thomas. Banker states that application has been submitted, accepted, and funds have been reserved. Should we ask for any type of number of submittal?
No, because I can't. You could. I just can't imagine that person would really throw it out there and be lying about it, though.
Yeah. This is from Carolyn.
Let me look up what a lot of people have been getting shown by their banks that we've seen. We did not see this from our bank, but what a lot of people have been getting shown, which I think may even have a reference number on it, is the agreement between the bank and the SBA to fund you. So that's the only thing I've ever seen that's got any kind of loan number, I think, on it.
This is from Carolyn. Can our employees file for reduced wages through unemployment and get the PPP, or do they have to stop reduced unemployment to get the PPP?
I think as long as they meet the intent of as long as they're reduced, they can still file for unemployment. And the only challenge you're going to face is how do you still deploy the money to get the maximum forgiveness?
This is from Mina. You spoke earlier about prepaying expenses. Can health insurance premium count as one you prepay?
Thus far, that's a good idea, Mina. Thank you for that. Thus far, there's been no guidance that says that you can't. The only place it talks about prepayment is associated with mortgage interest. So absent, somebody saying, hey, it's got to be full accrual basis accounting, which again, I don't know how the banks would ever inspect that. You should have the ability to prepay if you look like you're bumping up against the window.
This is from someone who didn't qualify for PPP loan, but this is interesting. We qualified as an essential business and work at partial capacity. More than half of our employees are staying at home for the stay at home order, and we are paying them full wages. Do we qualify for employee retention credit for those that stay at home and still get paid? And if we are, I'm not certain if I understood the below correctly. It looks like we couldn't use the same wages for credits. Assuming if we max out the retention credit wages for $10,000 for an employee, then the employer gets sick due to COVID-19. Can we take 80 hours since the max for this is $5,110?
So you got multiple things you'd be looking at in that specific scenario. So first off, with somebody who's staying at home because of a shelter-in-place order, on the employee retention credit side, there's some rules around company size that talk about. I swear I'm not sick. That's pollen. There's some rules around company size that you have to show either a reduction in gross receipts, and then you can utilize the credit until gross receipts are restored, and that really comes into play. The rule goes around employee size, and employer size. I don't remember specifically what that is, but where it really comes down to place is that if I'm above a certain employee size, I think it might have been 100 employees off the top of my head, then if I have somebody that's staying, like I've done like job sharing where it's like, look, we're at 50% capacity. You come in on Tuesday, you come on Wednesday. You really have to do it exactly like that. Like they can't both come in at the same time and work half a day. So it really has to be one day on, one day off. And you would utilize the full amount of the employee retention credit. What you can't do is then be claiming the FMLA credit at the same time. So in your specific scenario, what you would do is you probably would go employee retention credit. Once the employee retention credit was exhausted, you'd roll over to the FMLA credit. You just can't use the same wage base during the same time. I believe that's how it works.
This is from Twinette. Our employees filed for unemployment. Once the PPP is issued, are the unemployed staff members now considered employed since they're receiving paychecks from the company again using PPP loan? They need to declare their wages weekly on an unemployment end.
They're supposed to. So that's where I think you're going to have to be overly communicating. And the only person that this is really going to impact is, pretty much anybody that made $60,000 and below, because $60,000 gross feels like $48,000 net, which is the max you're going to receive in North Carolina. So, if that's a person that was probably pretty lazy in the first place and had zero loyalty to you, they may not come back. So somehow you're going to have to figure out, all right, how do I be overly communicating that, hey, the reason we're doing this is because we want to bring you back when this is all said and done. you might have to make some hard calls on some people that say thanks but no thanks. I'm not accepting the check, but they are supposed to be reporting the wages.
Okay, this is from John. What happens if you get back less than the 100% of your employees? Do they prorate the forgiveness amount?
Yeah, it's all prorated.
Okay, that answers and kind of fills the queue of all of our questions so far. I think we had about 50 questions that we answered, so we didn't have quite as many as Tuesday, but you had a good explainer on the front end of this thing. Any other questions out there before we wrap this thing up? Let me look at the chat here real quick to make sure that, let's see, this is from Stephanie. So can the FTE count be more, meaning that you ended up hiring because with our business, we're still working and bring in revenue? So
I think that's basically just saying, can the FTE count be more? Again, the only thing that matters at this point is that if your 2 average periods aren't equal and you failed, as long as the FTE count is the same or greater by the end of your 8-week period, you should be fine. Like right now there's no penalty for overhiring and having to be greater.
I think that answers all of it. So any final thoughts that you've got there, Adam, before we sign off?
No, we'll keep our ears to the ground. And, again, it goes back to, if anybody hears from the banks that reference BB&T and First Citizen specifically, if you get funded, please let us know, because we're trying to keep our ears to the ground on that. And hopefully something that happens this weekend to see the funds get replenished. Independent of that, again, it's going to be more applicable for really large companies, but I suspect on the Main Street funding program, we'll start to see banks doing something about that in the next week to 2 weeks.
All right, Adam, thank you. You did a great job. Oh, one other message has just come in here. Hold on here. Let's see. Where is it? I got an alert, but it's just a thank you. All right, great. Yeah, you are welcome. Thank you for taking time out of your day. One other question here. Let me see. Even though I don't have employees, what about independent contractors? Is from Gamal.
Independent contractors, Gamal, are on their own. So you file for you, and then the independent contractors are supposed to file for themselves. And at the beginning of the call, we talked about what's required documentation. Effectively, the 1099s that you issue them are the documentation that they're going to do on their end.
All right, people are getting slap happy. I'm not even going to answer this question. So it has nothing to do with this. So anyway, thank you everybody for getting on here, and we'll be posting this up on the BGW CPA YouTube website later on this afternoon. So thanks again, everybody. We're done with Throwdown Thursday.
All right, thanks, Gary.
All right, see ya.